Well, hello everybody, it's Neil Foley from the Business Growth Club here. Really fortunate today to have Lee Williams with us, who's a R&D tax specialist working with Jumpstart, the UK's leading R&D tax specialist. So how are you then, Lee?
Good afternoon, Neil. Yeah, I'm fine, thank you. Thanks for having me.
Yeah, pleasure. No, I'm really looking forward to this. What we're hoping to do over the next 25 to 30 minutes or so is actually explore the world of R&D, what it's all about, how does it work, and possibly why you should be interested. So it should be a good session. So let's just start off, Lee, if we can, by saying, what are R&D tax credits?
Okay, so research and development tax credits is a government scheme that was launched back in 2000, and it enables businesses that are across all sectors that are working on innovative, difficult, challenging projects to recoup some of the outlay and costs that they spend trying to come up with a solution that's going to solve the problem that they're looking to solve. And so they can get around about 26% of their costs back. So for every £10,000 they spend, they can expect to get back $2,600 in terms of a reduction to their corporation tax bill, or a tax credit if they haven't got a tax bill because they're loss making.
And is one of the key words used there was that they have to be doing sort of innovative research. Is that one of the keys?
That's right, yes. A lot of people, a misconception is that it's just for scientists and people that wear lab coats, but actually it isn't sector specific at all. As long as you're looking to push the boundaries in your industry, in your sector, and it's not something that you're looking to do that everybody else is already doing, and you can't just Google up an answer to something or use something that's readily available, then there's likely to be some kind of eligibility there. The trick is knowing what is eligible and what isn't.
Yeah, that must be hard. As I say, if you're in a lab with your white coat on, I can sort of almost get that. But otherwise, so if it's not sector specific, it can be anything where you're trying to do something new as a business or new to you?
Absolutely, yeah. We've got examples across all sectors, but the main claiming sectors, especially is manufacturing and software. And in those sectors, actually, it's quite surprising how many still think that what they're doing is just routine and not anything new.
So is it an education process? Because this is, as you say, there's 2000. Did you say in 2000 they launched?
That's right, yeah.
So it's been around 17 years.
That's right. In fact, it's been around 30 years worldwide, but it's been in this country since 2000, yeah. And it is an education piece as well. As I say, a lot of businesses I meet still have either not heard of it or have been told perhaps that they're not eligible because of what they do. But really, it's having a deep understanding of what they do and where that sits in relation to what's already known and out there.
So these are credits that you could claim yourself, presumably. I know we used to get 2 budgets a year, or the autumn statement and the budget. Not sure we're going to get that anymore. I think we've only got the one now coming. Do these change in every budget?
Not every budget. They have changed. In fact, year on year, they've become more attractive for the people that are claiming. In terms of how you claim, there's 3 ways really. You can try and do it yourself, but the HMRC manual is around about 500 pages.
Blimey.
You need to try and navigate.
Yep.
And you need to do an online claim, which again is not without its difficulties. You can try and do it through your accountant, who may or may not have experience of doing those type of claims. Some accountants maybe do 1 or 2 claims a year, if that. The larger firms may do a few more than that, but they will still perhaps not have the technical expertise of your sector to know what it is you've done and what part of it is eligible. And then there's specialist providers such as ourselves that have got trained technicians that have worked in the industry and understand what goes into a technical project that's eligible, and also have got an in-depth understanding of the rules because they do several hundred claims a year.
Yeah, that must help enormously. I
Absolutely,
guess.
That solves that disconnect in knowledge really, in terms of accountant who might rely on the client to tell them what they think they've done that's eligible, and the accountant and the client relying on the accountant to have an understanding of the rules. So
especially with a 500-page manual
exactly,
or whatever,
which is ever changing as well. So
really,
as I say, we constantly have to update our knowledge to make sure that we're up to speed with the changing rules.
And this is essentially to encourage businesses, which are incorporated businesses, presumably.
Yes, it has to be a limited company, so a business has to have a liability to pay corporation tax if they're profitable.
So this is to encourage incorporated businesses to try different things and new things without necessarily knowing the result? Is that one of the key criteria?
Yeah, the key criteria is that that you are looking to make an advance in science or technology, which sounds very sciencey, but as I said before, it's an advance in your sector or the the business that you're trying to do isn't already readily available, and there has to be an uncertain outcome. So you have to be
a degree of risk.
A degree of risk in terms of you may never be able to solve the problem, and actually a failing project can be eligible as well.
Oh right, so you've tried something, but it hasn't worked on a commercial basis, and you can still be potentially get some credit for that?
Absolutely, yeah. Failure is good for us because it shows that it was a difficult, challenging project, and again, thousands of pounds would have been spent trying to come up with a solution which at this stage hadn't worked, but it could be still an ongoing project trying to come up with the right solution as well.
Oh crikey. And if you were give us some idea in terms of what businesses have what they've been able to claim for, because is it just salaries, is it IT, what sort of things?
It can be raw materials, so for manufacturers that are building prototypes and scrapping prototypes because they haven't worked, all of those raw materials can be used. Salaries is obviously one of the biggest areas of eligibility, and it's the percentage of time within those salaries that they've been specifically working on the difficult, challenging part. So it's not the bit where you're doing the market research to see if there's any need to do what you're going to do or investigating what's already out there. It's the point where you've realised there's nothing out there that can solve your problem, up to the point where you've solved that problem and you're now ready to try and go and market it. And then you can also include software that you've had to specifically license for the project, and also subcontractors if you've had to outsource some of the work.
So the software could be software that is not software you've developed, but software you needed for that particular solution.
Yeah.
So it's quite broad ranging, isn't it?
Yeah, absolutely, yeah.
Is that part of the problem, that it's a bit broad, so you don't know which bit to attack? Or
I think that the issue with the eligibility usually comes down to, for instance, a manufacturer thinking, well, all we do is try and improve our manufacturing process or try and improve our product. We're constantly doing that, so that's just routine work. But actually, what they're doing, if they're trying to make their product last longer or fit into a smaller box or go faster, all of that work is eligible because it's not readily available and common knowledge out there.
And I guess if you've got particular processes or systems, as a company, you're not going to share those anyway, are you? So this is just not common knowledge to you, presumably.
Yeah, or that's readily available on the internet or
right.
Or
so is that the test that's used to say actually would a competent person be able to find?
Absolutely, yeah. As an example, recently where it was a software developer where they thought they weren't eligible because what they'd been asked to develop from their client, the client had the IP. So they thought they weren't eligible to claim because the client had the IP, so it's their product. But actually the client had no technical expertise, no competent software developing experts. They just merely had an idea, and the software developer had to, at their risk, come up with the solution to the problem. So the actual eligibility for the claim would have been with the software developer because it was
at risk, and it was their risk.
Yeah.
So if the company was just paying for time and saying, then it would have been different. But they were paying for a solution.
Yeah, exactly. Yeah.
So the interpretation is obviously important in these things, isn't it?
It is, and you need to be able to justify why you're claiming and explain how you think that fits in with the rules in case of any query or investigation that could happen. The HMRC don't check every single claim they see, so another misconception is that if you've had money back, you think your claim's been approved, but it could be that it just hasn't actually been checked at that time. So it's important that you've got rationale for where you've come up with that figure, both in terms of the costs that you've identified and an explanation of the project that you've done and why.
Is that your technical notes that you send with them?
That's right. We write in a comprehensive technical report that talks about a few of the projects that the companies have done, not necessarily all of them in depth, but are just a flavour of the biggest ones, and say this is say one of or two or three of 10 that are similar. And then we do a cost capture spreadsheet which outlines the costs and the percentages of people's time, percentages of raw materials compared to their overall spend. And as long as that sounds reasonable and isn't out of kilter with what you'd expect, then that should be fine.
And presumably, I know have got experts in different sectors, haven't you? Because
right,
it must be really hard to do the technical notes and the technical briefing.
Yep.
If you're a manufacturing bod and you're dealing with somebody in software or something different.
So going back to what I said about the different ways of claiming, quite often we find that where accountants or other people are being asked to do the technical reports, they usually rely on their client to either do the report for them, which takes up a lot of the client's time, or the client has to provide a lot of the information again, which takes time. So having an expert that has worked in the industry, can speak their language and actually write the report for them is a massive time saver for the client, and it also ensures that we capture everything that is relevant and eligible to maximise the opportunity to claim.
Because I can well imagine I could do a technical report and based on my own understanding, but of course that's different than knowing what the 500-page manual says is important.
Exactly. We quite often find when clients have done the technical reports that they actually talk about the product at the end of it,
rather than
does,
the process,
rather than the challenges they've had to overcome and the processes they've had to go through to solve the problem. Writing it in the way that the HMRC would like to see it presented in and covering the relevant parts is really important.
So how on earth do HMRC police this? Because I can imagine some of this is really technical. Some might be where they've seen it before, but there might be some which is relatively new to them. So how on earth do they police it?
Yeah, they are starting to look at more and more claims now as the scheme becomes more popular, and unfortunately there's a few sort of unscrupulous people on the market that are putting in claims that they shouldn't be. So they are tightening down on the claims that they're checking, and becoming more and more experienced on what's out there and what is eligible up to date. They don't check every claim, but around about 13% of all the claims that go in get either queried or investigated at the moment.
That's quite a high number, isn't it?
It is, yeah, and it's sort of the easier the scheme becomes to access, the danger is that can expose people's lack of understanding of the rules, which is why perhaps you need a specialist who can understand the rules, make sure you get the most out of it, but give you the peace of mind that it's actually going to be robust and defendable, and in the event of a query they'll defend it for you rather than you have to sort of open another can of worms and try and defend what you've put.
And I think you said earlier that the fact you've been paid doesn't mean that there's necessarily been you're past any danger point. That presumably they can come back at any stage and say, actually, we've looked at this again.
They can, if they in a subsequent year you make a claim and they query it, and they find that you actually weren't eligible, they will go back, and they can go back up to 7 years, I believe.
Really?
We've been asked to defend a claim for a client that had claimed themselves, and they were looking to go back 7 years. So,
wow. And if you use somebody like Jumpstart, if 13% is the average in terms of claim queries, if you like, what's it with Jumpstart if you do it via Jumpstart?
We've got a great relationship with HMRC. We talk to them and the Treasury on an advisory basis, and so as a result our query rate is less than 1%, it's 0.8%.
Wow.
And as I said, in the event of a query we'll defend that for our client because
you've written the report,
because we've written the report and
it.
we're confident in the quality of it. And we've got 100% success rate of defending that 0.8%.
So your relationship with HMRC is such as if they see one from yourselves, from Jumpstart, they know that you've already jumped through the hoops and have done it the right way rather than just try it on.
Yeah, well, you would like to think it's because of that, but it's also the fact that if they do look into it, there's nothing there that they can query.
You can defend.
Yeah.
And how do you get paid then, Lee?
So we and most specialist providers get paid on success at the end of the claim.
Okay.
So there's no cost to find out whether you're eligible. So my role is to talk to the businesses and the people involved and get an overview of what they've done, and to put that in front of an expert who's worked in their industry, the technical analysts, and to find out whether there's some eligibility there or not. So to find out whether you're eligible costs nothing, and then once we're happy that there's eligibility and clients decide they want to work with us, we only charge a percentage of the invoice value of the tax benefit that's received at the end once they've had the benefit into their account.
And so it's once they've had the money.
So they're never going to be cash negative.
Pain free, isn't it? And I think I'm right in saying that it's you have to claim for a past year rather than current year.
Yes, you can go back 2 financial years plus the
Okay.
current year.
So
So
can
if
you
you-
claim in the current year, or do you have to wait for your year end?
You can
and
start the process towards
Can
the
you?
end of the tax year,
Okay.
but the claim can only go in once the tax year is finished.
Okay.
So if you've got a tax year end of September 17, you've got until the end of this September to claim for September 15, or
Right,
that year
okay.
would be gone.
Yeah.
You can also adjust claims. So if claims have been done previously, and we go in and do the current year and think actually a whole load of stuff has been missed out from previous years, we can go back and adjust.
Oh,
In
so
that
you can go
example, we
back
could adjust
to 2
September
years.
15 and 16. Yeah.
So it's worth people having a look, even if they've had a look and either somebody said, no, you're not eligible because they didn't understand it correctly, or you didn't explain it well, or even if you've had a small claim and think actually that maybe there's something else here we could have a look at.
Absolutely, yeah, and it will cost nothing to find out.
Yeah, that's good. Can you give us some examples, Lee, of successful claims?
Yeah, so there was a claim that was for an engineering company over in Lowestoft that are in the oil and gas industry, and they'd done a small claim through their accountant, but changed accountants because they felt that the accountant was doing the claim under duress. So our technical analyst went in, and the claim was increased from 40,000 to 100,000. And what they do is fabrication for the oil and gas industry. So they have to prove welding techniques and get them certified up to very high levels of specification, and they spend thousands of pounds proving that technique. There's no manual that they can look at, no answers they can Google. They have to just try different permutations and different substances until they come up with a solution that's going to fit the bill, and if they don't get paid for the contract. So that was an R&D project, and having that understanding of the process and the challenges they face enabled us to sort of maximise their claim for them.
So you wouldn't, as a layperson, you wouldn't automatically think of that as R&D, would you? You'd think it's just part of what they do, isn't it?
It doesn't sound very sciencey, does it?
Yeah, no, because I guess they're working a lot with the oil and gas industry in Lowestoft. So yeah, it doesn't sound sciencey at all, does it?
And actually, decommissioning of oil rigs is a very there's a lot of that going on in the South North Sea at the moment, and there's high levels of R&D in that, in terms of trying to do that eco-friendly and without waste and things like that, and more efficiently. All those kind of things that ring R&D bells, really.
Yeah.
But on the face of it, it's just scrapping old bits of metal, isn't it?
So it just proves you need to know your sector, don't you? Know what you're looking for.
Exactly, yeah.
So there's an example in manufacturing. Any other examples you can think of?
So in software, I've had several clients in software, but there was one where they have written an office management system. So it's for a company that have a team of IFAs on the road that are self-employed. They've also got a call-in centre, and then they've got all the compliance that they have to manage. And so there were software packages that they were currently using, but none of them talked to each other, and to actually get a compliant report together was a nightmare because they had to use 7 or 8 different sources. So they had an in-house team of software developers that developed a bespoke platform that managed the whole company's business, from the call centre, the team on the road, client cases, and all the compliance stuff. It took them 2 years to do that. And as I say, our software technical analyst went in there and managed to identify where the eligibility was, because some of it was bolting bits of software together and but the actual integrating it into a system that talked to each other and was compatible across multi-systems was the key and the difficult, challenging bit. And they were able to identify where the spend was, and that was in a company where you wouldn't think that on the face of it there would be any eligibility. So.
No, because as you say, they're largely going to be using existing software packages, so it was just the bits that joined it all together.
Yeah, which sounds easy, but it was difficult.
I can well imagine. When you think of all the big companies in the UK, whenever there's mergers and stuff like that, it's always software that screws them, isn't it?
Absolutely.
Think of a good old Norwich Union where we're based, and all the problems they've had with GA and Commercial Union. It's all legacy stuff that one doesn't talk to t'other, isn't it? So how busy are you at the moment then, as this R&D's been around 17 years? Has everybody done it?
There's more and more people have heard of it and are claiming some way or the other. And so my challenge is really to show them that actually our expertise can add value, and that value is going to be obviously either trying to get more out of the claim for the client, but it could also just be the time saving in terms of them not having to do the technical reports themselves.
Yes.
And the peace of mind of knowing that our expertise means they're not going to get queried on the back of it. So it's usually one of those things that swings it. We work with lots of accountants that use us as a specialist provider because they simply don't understand that technical side of things, and again that they rely on their clients and they recognise that, and to use us as an expert. A bit like a doctor, if you've got a bad back, they'll refer you to a chiropractor that's going to solve it. They're quite happy to use us as a specialist provider for that technical area.
Because how big are the technical reports that you're writing then for
It
HMRC?
really depends on the size of the company and how many projects they're doing and the kind of complexity of what they're doing. So it's wide ranging really.
From what to what?
I'd say they're usually around 10 plus pages, but from a microclaim onwards, but they go into a lot of detail, as I say, about.
So that's a lot. That's a lot of work, isn't it?
It's a good few days' work.
Yeah, it certainly is, isn't it?
Mm-hmm.
So talk me through, Lisa, because I'm not sure I do understand. If we use the argument of 10 grand,
Yep.
and I've spent 10 grand of eligible spend,
Yep.
and I've made a profit as a company. So
Yep.
last year I made a profit.
Yep.
How does that 10 grand work? Is that just an allowable business expense?
It's just a reduction in your corporation tax on your CT600 tax return.
Okay.
So there is the actual enhancement rate is 230% of your actual eligible spend. So you times the 10,000 by 230%.
So that comes
and that's your
23,000.
enhancement. So your costs go up by that amount.
Right.
And then that reduces your profit, and then you pay tax of 20% on the reduced amount.
profit. So we're not going back and rewriting the accounts.
No,
it doesn't touch the accounts.
Doesn't touch. It's just for the purpose of your tax return.
Tax return.
Yeah.
And alternatively, if we're embryonic or we haven't made a profit yet, there's something you can do with that as well, isn't there?
Absolutely, yeah. So another misconception is if you're loss making, or if the enhancement means you go into loss, you haven't got a tax bill. So a misconception is, well, if you're not paying tax, then you can't get cash back. But actually, you can surrender the losses for 14.5% cash, which actually works out to about 33% of your initial spend. Or you can carry forward the losses to the next tax year if you think you're going to make a profit, and then you'd save 20% on that enhanced amount the following year.
And if you give away or the giveaway is the wrong term, but if you surrender your losses, because normally you carry forward losses indefinitely, you can no longer do that. Then for this element, for the R&D, for the 10 grand or whatever it is.
Yeah, so if you surrender the losses, you get 14.5% cash, and that's it. You can't carry them forward.
Right.
But you don't have to surrender all of them. You can surrender an amount to recover as much cash as you need, and then carry forward the rest of it.
So if cash wasn't an issue, you wouldn't surrender. You probably, as long as you thought you were going to be profitable at some stage, you would wait to get into profit.
Yeah, and your accountant would be the best person to advise on the implications of that. We merely just work out the calculations and say these are the options. Most businesses in that position, because of the nature of where they are in their business, tend to take the cash, we find, but it's entirely up to the client.
I didn't realise you could do a mix and match, and whatever, as you say, suits and whatever they need to keep body and soul together while they're pursuing the dream. Okay, so how do people get in contact with you then, Lee? Because if you're offering, what you're saying to people is have an initial conversation, no charge or obligation. How do they get in touch with you?
Yeah, I'm more than happy to speak to anybody, as I say, to offer a complimentary assessment of their eligibility. My telephone number is 07794 201 990.
Do you want to say that a bit slower?
07794 201 990. Or you can email me on lee.williams@jumpstartuk.co.uk. Lots of UKs in there. Or our website is www.jumpstartuk.co.uk.
Okay. And what we'll do is we'll have a transcript of this available on our blog, so and Lee's details will be down there for that. And finally, Lee, I wanted to ask you a question in terms of something I always ask people, in terms of, I'm a fair bit older than you, but if you could go back to being, 18 or 20, knowing what you know now, what would you tell yourself?
I'd say to myself, don't ever accept second best.
All right.
And
but you're a Liverpool supporter. That can't always be true. That can't be true, Lee.
And always, never accept second best, and always do something that makes you happy, and do it with passion.
Yeah, sounds like good advice. Well, thank you very much for your time, Lee. It's been fascinating, and hopefully everybody now you know more about R&D. It's certainly a subject that's worthy of investigation, even if you never thought you were in that field. And have a chat to Lee. And thanks very much for listening, and see you again, Lee.
Thanks, Neil.